Perhaps stating the obvious, if one sells an asset at a profit, then it will usually trigger a capital gains tax liability. That said, some assets are not chargeable assets at all, and they can be disposed of without any tax charge. Additionally, the sale of some assets will also qualify for various capital gains tax reliefs, and these reliefs are made available by the government to encourage certain types of behaviour and investment. So these reliefs may exempt a gain in full or part, or may defer the gain until a later event triggers the liability. So for example, over the last few decades, there's been tax reliefs provided for entrepreneurs selling their businesses. They pay less tax due to entrepreneurs relief. And regardless of whether you feel this is the right thing or the wrong thing, it's clearly an ingrained policy of successive governments that an entrepreneur should pay less tax in these circumstances rather than, say, someone who sells a Picasso painting that's been hung on the wall for a couple of years. Perhaps the most commonly encountered CGT relief will be main residence or principal private residence relief, which acts to exempt all or part of the gain on one's home on sale. Perhaps it's fair to say that capital gains tax is often more of a concern for high net worth individuals on the basis they're more likely to hold assets which have appreciated in value and not covered by relief. Our view is that it's important for this type of client to consider what reliefs, if any, are available to reduce that gain. And I must stress the importance of considering these things before the asset is sold. As you would expect, we have experience in advising on a variety of CGT matters. For example, recently we advised a business owner disposing of shares in his personal trading company. Because the company held a number of high value investments in unconnected companies, we advised them on the necessary steps to make sure the shareholder qualified for entrepreneurs relief. As I said before, this is a relief which reduces the rate of tax for entrepreneurs. So essentially in that case, the advice halved a potential tax liability from 20% to 10%. We've also advised a lot of buy-to-let landlords on how to reduce capital gains tax liabilities on property sales. And this has been of particular interest in the last year or two, given the increasing tax burdens being placed on landlords. Further, an individual's tax status, so whether they're resident or domiciled in the UK, will also have a significant impact on their tax position. So as such, this does provide for some planning opportunities. As I mentioned, ETC Tax has significant experience and expertise in helping clients prepare for asset sales, whether shares in their business, a portfolio of shares, or property, or cryptocurrency. So if you're considering a disposal of capital assets, then please do get in touch.